All right. Okay. Now, our part two, we will talk about right now with global funds are steadily flowing into Asian stocks market. Now, how can we take advantage of this trend? What should we do? And how can we benefit from it? Right. Okay. Now, first of all, let's talk about KLCI first. Today, KLCI index edge higher, right? And as the trading resumed after the long weekend, as you can see now, with global stocks today leading in both trading volumes and gain. And I know that many of our scholars have actually asked me why growth stocks are so popular today. Now, this surge is driven by a positive surprise. The US has further increased traffic on medical growth imported from China and also accelerated the implementation timeline. So, starting in 2025, the traffic rates will rise to 50%. And by 2026, it will further increase to 100%. So this will create a more favorable operating environment for Malaysia growth manufacturers and also will boost the growth sales and the average selling price, right? And because of Chinese growth manufacturers will have less competitive pricing. So after all said, as a result of this news, the healthcare sectors opened higher and it continued to climb up. Here, as you can see, for the healthcare sectors, right, with a maximum increase of, before that it was 9.54%. So what related component are getting benefits from it? Component stocks like Top Growth, 7113, it opened 28% higher before it pulling back. And another one, while IHH 5225, it saw a maximum gain of 6.78%. So now, recently, the major stocks indexes in Asia Pacific region have rebounded significantly, with Southeast Asian markets particularly standing out, right? And foreign funds have been flowing in for 5 consecutive weeks already. And the MSCI Asian Index is now approaching to its highest level since April 2022. So, factors driving investors' enthusiasm for the markets, like, for example, right, Indonesia and also Malaysia, includes relatively low foreign investor position and the supportive of local policies and the attractive of valuation. So all these advantages will create opportunities for the regions to capitalize on global investors shipping from a larger economies, right? Makes sense, correct? Now, and also like Vietnam, Malaysia, the Philippines, and Thailand all recorded the highest annual growth rates over the past 4 quarters. Now, so as you can see here now, Vietnam and Philippines, it continues to be the region's fastest growing economies, but also with the growth rates of 6.9% for Vietnam and 6.3% for Philippines. And also while Malaysia, it ranks third with the growth rate of 5.9%, which means that it's still growing very fast. It's still doing a very good job. Okay, now, right now with the US election approaching, the potential for global market volatility is prompting investors to shift from the traditional markets to emerging ones. Now, in the Asia Pacific regions, Malaysia and China stocks market are favored by their resilience, right? Which means that it can effectively withstand with market fluctuation. And also another thing which is boosted by the clear reforms and the higher market liquidity. Malaysia's stock market is believed to have the strength to resist the market fluctuation. All right. So right now, in short terms, we will still keep on seeing some steady dip buying, which is keeping the index on the rise. And right now, focus on construction stocks. Okay, understand, right? Okay, right now, according to MIDF research statistics, foreign investors makes a net purchase of 217.6 million last week, which is marking the fifth consecutive weeks of net buying, right? And in its weekly funds flow report, the MIDF research, they highlighted that the top three sectors with the highest net inflows of current funds were the utilities. Okay, for utilities is 335 million, and real estates, which is accounting to 52.8 million, and for the constructions, which is 49.4 million. And meanwhile, after the buying of 3.5 million last week, local institution ended a 4-week streak of net selling, which means it's a good thing, right? And for MIDF research, it also shows that the average daily trading volume, which means that the ADDF for local institution went up by 12.5%. And after foreign investor also went up by 10.6%, while the local retail investor is saw a decline of 5.4%. So the net inflow of foreign funds shows that renewed interest in sectors such as like utilities and construction. And ahead of the Federal Reserve interest rate cuts meeting, the expectation of rate cuts continue to persuade the US dollar. And additionally, with international oil prices remain stable, the Malaysian ringgit strengthened, extending Friday gains. And as you can see, for the ringgit right now is 4.3 against the US dollar, which means that driven by strong economic fundamentals and the expectation of a rate cut, more foreign funds are flowing into Malaysia market, with the KLCI index is expected to reach a new high. All right, everyone understand this part about Malaysia market? If yes, then give me a response before I go into the part trade. All right. Now for our part three, we'll move on to our phase. We'll talk about our phase three, our bonus plan, and how will we keep boosting profit against the backdrop of interest rate cuts. Okay, for today, first of all, just now I saw in the comment for today, the China is having a holiday. So SSE market is closed. Okay, now we are focusing on double trading in Malaysian market today, right? And the stocks we are targeting, which is 8869B metal, which we previously bought, right? So now the holding period is 5 up to 7 trading days with an expected maximum returns of 23%. So opportunities for dark pool trading in Malaysia markets has recently been decreased significantly. And I also have mentioned this several times already. So right now we will shift our focus to premium trading in SSE market. And also we will be shifting our target to dark pool trading in the US. All right. So tonight we plan to sell the US dark pool trading stocks DSM, okay, which we bought last Thursday. And we are going to sell it based on market trends, okay? Now, right now we are in our third phase. So in our third phase, our strategy, we will increase our dark pool trading in US by using short cycle to buy back at low price shares. And we are going to sell them into the market to boost our returns. Understand? And recently, for right now, there has been a buying interest in US stocks market on this, right? And the short-term funds are making move in the US market. So a lot of shareholders of high-quality stocks are looking to sell their shares through dark pool market, which is giving us the opportunities for dark pool trading in high-quality US stocks. So we are right now, we can take the advantages of short cycles for buying and for quick buying and selling. All right? Okay, let's take a look at our next slide. Okay, tomorrow we will focus on premium stocks in SSE market, as tomorrow SSE market will be opening back. So we have achieved nearly 20% returns on each of our premium trading stocks, right? So why can premium stocks use such a short-term profit? I have explained this several times, but this is also, this is the advantages comes from institution funds driving up the price, pushing up the price, pulling up the price, and primarily due to the strong market demands, right? As you can see. Now, take a look at here. Let's go through it together, okay? When the numbers of buyers significantly exceed the number of sellers, with which more buyers than sellers, then buyers are willing to purchase at limit up price, which means that after the liquid limits up and buyers are willing to purchase at the price, which is causing the stocks to rise rapidly and eventually hit another limit up price. So continuous limit up usually comes with high market enthusiasm and a lot of investor attention. So we leverage this market enthusiasm and also investor focus to match trades and pull up the stock's price. Clear? So, as previously discussed, the bonus plan has a shorter cycles and a larger return targets. And additionally, our requirements for members execution are even higher already right now. So when it comes to our first phase, our elite trading plan, we are going to aim to build a team of traders, a team of strong execution traders and high net worth clients after completing the initial three phase 1, phase 2, phase 3. Understand? Now, at the time, participants will in this phase will undergo a systematic traders training and a trading camp travel. So once each participant achieve the 410% profit, and then our dimensional will charge a different profit sharing fees, okay, according to the agreement. Understand? And our mutual goals is mutual success. The more the participant earn, which means the more you all earn, the more dimensional will get back, right? Which is we are going to just get a portion of it, which is the sharing fees. So by guiding participants, all of our scholars to achieve the 410% profit plan, we aim to quickly enhance our institution visibility as well. All right, clear. Eh, Okay, now let's take a look at the next slide. All right, as you can see here, and what was shown here. Now, this because this is the comparison, okay? Now, yesterday, a scholar asked me why, Sir Joel, why that IPOs in US stocks market tends to have a higher rates of failures, right? While for a new IPOs in China almost never fails on their first listing day. And this is US stocks market, okay, and this is China IPOs. This is because the difficulty of listing companies difference between two markets. The two markets requirements for the IPOs are different. And for Chinese company that go public have already passed a very strict regulation, regulators, checks, and tests. So the strict and screening process ensure that the IPOs in China generally perform very well on their first day. All right. Now, this is phenomenon related to value investing principles, such as like those advocated with Benjamin Graham, right? Where a low valuation is pursued. Now, for example, if the company market value is less than its book value, which means that its PE to PE and the BE, which means that the price to earning and the price to book ratio might appear very low. Am I right? And this core idea is that buying the company at market value and then sell it at the yield of a profits. Okay, for example, again, to get you guys a better clarifications, okay? Now, if you can take a look at this, I put it down here now. If a company has 5 billion, okay, 5 billion in cash, but the market value of only 4 billion, buying the company for 4 billion and selling it later would net or 1 billion in profits. Am I right? Which in line with the government investment strategies. It's very straightforward and very easy to understand, right? And as you can see here, this is in August last year. China implemented a tightening policy for IPO and resulting in a decreased numbers of companies going to public. Like for example, last week, there were only two new IPO. And for this week, there were only one new IPO. And previously, China had 8 to 10 new IPOs per week. But after the tightening policy ensured that only the companies with a very strong performance and strong development prospect can be listed. So which is reducing the number of new IPOs by 3 times. So with a significant reduction in supply and a high demand, definitely the price tends to rise, right? So, which means that when supply is significantly less than demand, as indicated by many scholars who respond rise for a price increase, right? Now, it is actually a very straightforward economy principles that price will go up when supply is limited and the demand is strong. And this is why China IPO remains vibrant, remains very strong, right? With a concentrated funds from both institution and also retail investor. All right, understand this section. If yes, please give me some response. Please give me some response. Okay. Okay, you can look at this chart, and of course, I will explain it to all of you. Okay, now in 2023, the top five exchanges globally for new stocks financing were the Shanghai Stocks Exchange, now, and also Shenzhen Stocks Exchange, Nasdaq, NYSE, National Stocks Exchange of India, but with China leading the way. And in 2003, there were 313 new stocks listed in China market, raising approximately 356.5 billion in CNY. And in December 2003 alone, there were 21 new stocks listed in China, right? Raising about 15 billion in CNY with a 0% of first day failure rates. So it's actually very good, right? And the number of IPOs in China decreased by 27% in 2003. And since August 2003, the pace of a new stocks offering in China has already significantly slowed, now with declines in both the number of new stocks approval and the IPO's application. And in terms of performance, new stocks listed in China 2023 have an average first day return of 45%. Think about it, 35% averagely, they will go up by 45%. So despite the relatively weak stocks market performance, the enthusiasm for subscribing to new stocks was actually very high. And with all new stocks receiving oversubscription of more than 100 times. So looking ahead to 2024, the new stocks markets continue to perform strongly with almost zero failure rates. And for tomorrow, the result for subscription of 30,155 LUM, Hebei Broadcasting Wireless Media, and also another one is 688615. INSIC information will be announced. So among the newly available and allocated stocks, 301551, Hebei Broadcasting Wireless Media has the lowest price, which means that I mentioned this before. In its first day gain is expected to surpass that of 301601 Petuk Technology, right? Remember from our previous period. Okay, now everyone get the idea here. If yes, give me some response, okay? Okay, let's take a look at our next slide. Okay, now take a look at this one. Why did I mention and why did I say that I believe that the first day increase for this 301551 Hebei Broadcasting Wireless Media is likely to surpass that of earlier 301607. Why? Because Hebei Broadcasting Wireless Media issues price is 9 as you can see, 9.4 CNY, and its issue price earning ratio of 13.95 times, which means that which are lower than the industry average of the lower average from this here, which is the 20.01 times. And this is a new stocks with dual low attributes, which means that the amount which is lower than 10 CNY, right? So this is its first day increase is expected to exceed 300%. As you can see, for this one, for the lower than dual digits, as you can see here, right? It anticipate 220%, it anticipate 368%, it anticipate 292%. So we are this particular Hebei Broadcasting Wireless is going to expect to exceed 300%. All right, now on the other hand, for in-stake information, which is a well-known in the C and application sectors, and the company technology is widely used across various industries, including retail and government agencies. And in-stake information hold numerous core patents and also intellectual property, which is creating a strong technical barriers and enabling it to provide a precise and efficient information processing service. All right, and this is an important factor for the companies to sustain their growth. And both of these stocks have their investment value, but considering the issue price, 301551 Hebei Broadcasting Wireless Media is not attractive to investors. Understand? Understand, right? All right. Now, okay, understand. Then right now, we are going into our part three. Okay, now, for our third fair, yesterday I have explained how individual investor can achieve a win-win situation with institution, which is following along with institution in the market, right? So when trading a stocks, think timing. Timing is important. It's not about buying cheap or selling high. The method for determining that whether it's a right time to buy or it's a right time to sell is based on the potential of for the profits. And stocks are never too expensive to buy, or it is never too cheap to sell. You have to understand this. Okay, here we will talk a little bit about our first stage of our elite trading plan. And scholars will, at that time, for our elite trading plan, scholars will undergo a systematic trader training and an intensive camp trips. All right. So how is an excellent trader or an operator trained? Some may say that excellent traders fall into two categories. The first category, which is the type that it's born with knowledge. And such people quickly realize that after trading for a while, oh, this is how trading should be done. So from then, they stay on the right path. Then of course, I like to imagine about this. I don't believe really truly about this because among the traders I have seen, the truly excellent ones are the second type, which is the second category, those who learn and gain knowledge, which means that the excellent traders I have been seeing are those who gradually work from not their way from the very bottoms all the way to up, and usually thinking independently with all actions aims to improving their trading understanding. And of course, they face difficulties as well. All excellent traders face difficulties and they confront the challenges, overcome obstacles, and never avoid problems. Right? So, In stock investment and also in trading, reaching to the end requires very careful analysis and also alignment with the market trend. In other words, like successful is just temporary, and the traps you miss will eventually appear at a very crucial point. And precisely maybe hitting your pinpoint, right? So no matter how smooth your trading has been before, you still have weakness and also have the gaps, right? Which the markets will eventually detect and exploit it to an unordered market. So excellent traders, whenever they encounter confusion or even whenever they encounter obstacles, you will actively think throughout, search for reasons, right, to how to solve it and resolve the issues. And for excellent traders, they do not avoid their problems because they know that only by solving problems and then they can truly progress. And for excellent traders, it can overcome human nature, resisting the discomforts of the trading process, focusing solely on what is the correct behavior, and of course, denying themselves from correctness. So, they are always rational and objective, not swayed by others, and do not have a short-sighted perspective. All right? Okay, now exceptional, and again, I want to emphasize this, like exceptional traders are able to stay above the noise and not getting caught up in daily market swings or emotional reactions like most people do. So they have a very unique vision and perspective and seeing the markets for what it is, full of ups and downs over a time. So what set great traders apart from their ability to rise above the crowd and stay all at the top? They rarely complain. They have a very clear goals and act decisively, even if they haven't hit it big yet, which means that they haven't achieved a very big amount. This you guys still need to stick to this principle, and success is just a matter of time. Understand? Now, here's a story that many scholars might be familiar with, but this is a little bit different, okay? Now, let me share this story with all of you. Imagine there are two flocks of sheep in a pasture, okay? Now, one in the south and one in the left. All right, and there are also two types of predators, which is lion and wolf. Okay, the two types of predators is lion and wolf. Now, take a look at here. At the moment, God also provide two kinds of predators for the sheep. One kind was lion, and the other one was wolf. So God says to the sheep, if you choose wolf, you will receive one wolf. Okay, only one wolf, which can bite you as it please. Now, if you choose lions, you will receive two lions. There will be two lions, but of course, you can choose either one of these two lions, which means that you can switch between those two lions whenever you like. All right? Okay, now understand this question, right? So think about it. Which one, if you choose, you can choose either one of the two lions and switch between them or whenever you like. So reply in the comment to me that which type of predators do you all want to choose? Do you want to choose the wolf or do you want to choose the lion, the two lion which you can shift? Type in the comment area, okay? Type it out that which types of predators that you want to choose. You want to go to the south. For the south is the wolf, and for the north is the two lions, which you can shift among those two lions. Type it down in the comment, okay? And let's see how many of you are choosing wolf, how many of you are choosing lions. But, okay, another 3 seconds. 3, 2, 1. All right. Now, it's almost half, right? Some of you are choosing wolf, some of you are choosing lion. Okay, let's take a look at our next slide and I will explain which one to choose and why. Okay, now first, you remember your choice first and listen to what I say. Okay, now, the southern flocks of sheep. For here, okay, take a look at this screen. The southern flocks of sheep decided that they want to go to the woods. This is for the woods, okay? Now, which they think that while it's less scary, where less of the threats compared to the fierceness of the lion. So they ran into the woods, right? And the wolves moved in and started attacking the sheep. But since the wolf was actually smaller than the lion, right? So both have a small appetite compared to the lion. So one sheep was enough for the wolf for them to eat for several days. Understand? One sheep are able for the wolf to eat for several days. So as a result, the flock was only hunted a few times over several days. And this means that the southern flocks only face attacks every few days. Understand, right? Okay, now let's take a look at the lion part. And on the other hand, the northern flocks thought they could handle the fierceness of the two lions better. So especially since they could shift between the two lions, right? Which they can shift between them. So they picked the lions. Now, one lion went into the flocks, while another remained with the goats, because each one at a time. Which means there are two lions, but only one are going into the flocks. Okay, understand? Now, but lions are not only fierce, but they are hungrier. They need to eat one sheep a day. And a lot of flocks got chased every single day and quickly realized that they have made a mistake. And at that time, they begged the God for a change. They wanted to go to the north side, but God told them, once you pick an enemy, you cannot change it. Only you can change the lion themselves can be solved. Only the lion themselves can be solved. Okay? Which means that there are two lions. Only one time you can shoot if between the two lions. So the northern fox has no choice but to keep switching between these two lions. But however, both lions were equally fierce, and no matter which one they choose, the situation was much worse than the southern frog, which is the worst part, right? And eventually, they decide to let one lion become fatter and strong, while the other lions to remain thin and starving. So, when a teen lion was about to die of hunger, the fox requests a change. So, which means that after a long period of hunger, the teen lion realized that although it was extremely fierce, it was at the mercy of the sheep. Because if the fox doesn't want to change the teen lion, eventually they cannot eat, right? It cannot eat. So the sheep could easily send it back to the god to suffer from hunger and even starve to death. So by understanding this, the teen lion become more practically accommodating, which means that it only eat big or even sick sheep and sparing the healthy ones. So the flock was delighted, and some suggest that they should permanently keep the teen lion and get rid of one of the fat one. But an ram wanted them. The teen lion is only being kind because of it is fear of being sent back to the gods to starve, right? But think of it, if the lions, the fat lions, if the fat lions die of hunger, we have no choices anymore. And the teen lions will soon return to its fierceness nature, right? If there is no option, only the teen lion, definitely you will go back to fierce and eating all the sheep, right? Just to stay in the grasslands a little longer. We try to please the flocks in every way. And meanwhile, the lion sent to the god was left in tears. So, and after enduring numerous hardships, the northern Spross finally lived a free and comfortable life. So in contrast, the southern flock situation, the southern flock situations grew increasingly worse. With no competitions, the wolf only becoming increasing reckless, killing dozens of sheep every day. Because it's getting fatter, it needs more, right? So this story illustrates that having the power to choose ensure a survival. Otherwise, one is left. If one is left at the mercy of others, right? And this story shows that the power of choices can make a difference in survival. All right. Without it, you are at the mercy of others. And the reason why I share these stories to all of you, because I wanted to tell all of you that, such as like the northern flocks, they have learned that even with a challenging choice, strategic management could lead to a more manageable situation. And on the other hand, for the southern flocks, inability to adjust their choice leads to a continuous suffering, which is emphasizing the value of adapting and foresight. Understand the moral of the story? Everyone get the idea and the concept of this story. All right, if yes, give me some response. Yes, and it's the same thing. Anyone who doesn't have the options to choose in their investment, you guys will find it difficult to beat the market, right? We need to have option to choose which we want to invest in. And that's why institutions choose multiple markets. When the profit margin in the US market are small, can we deploy the stocks in the Malaysian and SSE market instead? Yes, we can, right? There are more options in the investment market. And if someone is stubborn and only wants to know how to buy US stocks, they are not giving themselves the options to choose. And such individuals will not do well in investing. Understand? Now, take a look at this. Take a look at here, okay? Institutions consistently profit because they use multiple strategies to reduce risk and to expand their returns. And most retail investors, however, do not understand how to reduce risk and leading to a lower investment profits. So each market fluctuations follow a cycle. If you don't grasp the overall directions and don't know how to choose, it will be just determination, right? So choice are more important than efforts. Like for example, okay, now choosing the wrong major in school or even the wrong partners in marriage can lead to a lot of setbacks, right? And also back to just now our story. In both investing and lion and the wolf story and the sheep stories, making the right choice is important for a long-term success. Just as choosing the appropriate enemy leads to a different outcomes for the fox, right? So selecting the right investment strategy or the right markets can significantly impact your financial well-being. And this is also why I hope that all the scholars can choose the right path in investing. If you choose the wrong path, no matter how you proceed, it will be still well. The only choice is to take a different route, a different route to go. And this is why our recent focus has been on premium trading and new stock subscription IPOs. All right? Then, okay, for this part, and let me tell you, the market is actually fair, but also ruthless and impressive. Everything is in one. Now, institution makes money because they have established strategies for doing so. Like, for example, as you can see here now, well-known funds like Soros, Quantum Funds, and Robertson Tiger Funds have their own investment strategies that involve in buying low and selling high through various trading tactics to achieve their beautiful returns, right? But what are these mysterious trading strategies and how do they work? Stocks strategies can be simply understood as buying and selling stocks, which means like also buying low and selling high. Like, for example, stocks quantifications and can be understood as using big data or constructing data models to predict futures price movement and the relationship between investment asset for making trading decision. And for stocks quantification, can be divided into quantitative stock selection and quantitative buying. Okay, look at this. Now, quantitative stock selection involves in using algorithms and to determine whether stocks meets the criteria. If it does, then it will be included in the stocks pool. And if it doesn't, then it will be removed in the pool, right? And second thing is quantitative buying, which is refers to various quantitative indicators that to judge future stocks price trend. And if the trend is in an upwards, buy and sell. If it's downward, sell it off. If it's fluctuating, engage in selling high and low buying. Understand? All right? Yeah, if understand, give me some response. Okay, now this is the second type. Let's take a look at here. Macroeconomic strategies. Now, this is also relatively straightforward. Macroeconomic strategies involve in analyzing investment targets price trends based on macro factors such as like interest rates, policies, economics indicators, which is similar to fundamentals analysis. All right, and let me give you an example, okay? Which means like when the Federal Reserve cut interest rates, funds may flow into Asian stocks market and leading institutions to position themselves in advance, right? And this is also why foreign capitals has been continuously flowing into Malaysia stocks market this year. It's the same concept. Okay, and then for next one, which is relative value strategies. And these strategies involves exploiting price difference between overvalue and undervalue investment asset to generate returns. Okay, now let me give you an example for this as well. If the US stocks markets are overvalued, a short selling strategy might be employed, right? You can use short sales if it is overvalued, while such as like investing in undervalued markets as well, such as like in Malaysia. Malaysia is undervalued, so would be a strategy to go for long. Understand? And for this one, multi-strategies. And this approach involves deploying different strategies across various markets to reduce risk and to achieve returns. Okay, everyone understand? Okay, now investing. Remember this, okay? Now, investing in stocks is a game of competition and shares. And in the stocks market, you are not just competing not only with others, but you're also competing with yourself. Now, the phrase have buy stocks in the directions of the trend is commonly heard, right? But do people truly understand it? Do people truly understand what is buying according to the direction trend and what is trend? Although 85% of retail investors cannot actually answer this. And to me, the trend is combined force of capitals, including both institutional investor and retail investor. So the rise and the fall of the stocks are not only determined by any one person, not only one person that could determine it, okay? The one who guides the stock's price is the main force. And many investors first look at the overall market trends and then the sector's trend, and then finally individual stocks trend. And these trends are interrelated. Understand? You must look at all the trends. And to sum it up, follow the small trends to make more money, and follow the big trends to make big money. And follow the trends means align with the direction of the capital force. Understand? Which is usually driven by main forces or institutional investor. However, please don't chase high. Follow the trend, yes, but don't go for the trends when it is at a high level. Understand? Now, investing in stocks market also require courage. Without sufficient courage, you cannot actually seize opportunity. And many people fail to make money even in a bull market because they are overly cautious. When the market rises slightly, they expect it to fall, or they keep their position light, even reducing their holdings as the market rises, because they think that the market cannot go higher. It's already breaking the previous historical high, so it cannot go higher anymore. Historically, no. But after breaking historical high, it's actually a good moment to go even higher. So this kind of approach doesn't yield profits, understand? And the stock market is a zero-sum game. While some traders make money, others may lose. Thoughts from this perspective, the more about balance than fairness, understand? And this is why whether you can understand the market and also seize the opportunities and have the courage to act will be very important factors in achieving financial freedom and advancing to a higher level of a trader mindset. All right, clear. All right, that's all for tonight.